Gradual stabilization of the foreign exchange market.
So at this note, anticipated by the food index. It goes without saying, therefore, that productivity cannot be enhanced in a very high interest rate environment where access to credit is equally constrained. This is why we think the bank should devote more time to assess the impact of sustained policy rate hikes, not only on the general price level, but also on the overall economic activities. In support of productivity, we also think the bank should consider resuming targeted interventions to SMEs via DFIs, that's Development Financial Institutions, especially like the likes of the Bank of Industry. This is to ensure that as we strive to achieve a $1 trillion economy, which is also crucial, and it also will suggest that monetary and fiscal policies must work in sync for the achievement of desired macroeconomic goals. Mr. Governor, we would also like to draw your attention to a number of concerns which have been raised by members of the public in relation to the Apex Bank and the banking sector in general, notable among which are: one, persistent cash scarcity in recent times, despite assurances by CBN to address the challenge; difficulty in accessing cash from ATMs, including those located within the bank premises; and prevalence of dirty and mutilated naira notes in circulation; and of course, excessive bank charges and slow rate of solving customers' complaints; and of course, the continuous high rate of failed online transactions. We also would like to note that the economy also, experiences a low interest on savings deposits, despite the over 875 basis points increase in the NPR since February this year, which has taken lending to beyond 35%. Lastly, much as we have saluted all of the positive reforms, particularly around the foreign exchange market, and of course the price stability and the clearance of over 5 billion out of the inherited 7.4 billion forward contracts, we equally wish to advise that it is urgent to resolve the outstanding backlog of $2.4 billion, because we believe that this, and from all the petitions we have received, that from small, medium, and large enterprises, and particularly manufacturing companies, claim they are experiencing operating losses, job losses, and even losses to government tax revenue.
Senators, before I delve into the state of our economy, let me briefly outline the CBN's mandate as stipulated in the CBN Act of 2007. Our primary responsibility is managing the nation's monetary and financial sector policies, while our core objectives encompass ensuring monetary and price stability, issuing legal tender currency, maintaining external reserves, promoting a sound and robust financial system, and acting as banker and financial advisor to the federal government. Amidst prevailing global and domestic economic challenges, the bank prioritized the need to curtail inflation, stabilize the exchange rate, restore confidence in the financial markets, improve financial inclusion, and foster policy transparency during the year. These measures reflect the bank's resolute commitment to sustainable economic growth and effective monetary policy management. As we advance, we reaffirm our unrelenting dedication to achieving our objectives and serving the Nigerian people through effective monetary policies and prudent financial management. Distinguished senators, as we review our economic performance, it is crucial to consider both the global development landscape and our domestic environment. This is necessary in view of the interconnected nature of the world economy, which implies that global developments inevitably influence outcomes in our domestic economy. The global economy has demonstrated considerable resilience amid numerous headwinds. Projections indicate a growth rate of 3.2% and 3.3% for both 2024 and 2025 respectively. Global inflation is forecast to decline to 3.52% in 2025 from 9.4% in 2022, where it was highest. However, we must remain vigilant as the ongoing Russia-Ukraine war, lingering supply chain disruptions, and inflationary pressures continue to pose significant risks. In the crude oil market, we have observed a decline in prices during the third quarter of 2024, primarily driven by increased supply and revised global demand projections. On the domestic economic developments, I am pleased to report that our economy has demonstrated remarkable resilience. In the third quarter of 2024, the economy grew by 3.46%, up from 2.54% in the same period last year. Services sector continues to be the primary economic driver, contributing 53.58% to GDP, with a robust growth rate of 5.19%. The agricultural sector's GDP also grew by 1.14% from the 1.30% recorded in the third quarter of 2023. The industrial sector has also shown remarkable improvement, with its growth rate surging from 0.46% to 2.18%, indicating a tremendous turnaround. Importantly, the non-oil sector maintains strong performance, contributing 94.43% to GDP with a steady 3.37% growth rate. The oil sector's growth rate has improved significantly, rebounding to 5.17% in third quarter 2024, mainly due to the improved security surveillance, which resulted in increased production of crude oil and natural gas. On the fiscal front, the public debt to GDP ratio was 56.2% as of end of June 2024. Although our debt stock exceeds the 40% national threshold, it remains well within international benchmarks, indicating that our debt levels, while requiring attention, are still manageable. The inflation rate rose slightly in the fourth quarter of 2024 from 33.88% in October 2024 to 34.6% in November 2024. This is attributed to the monetary policy normalization steps taken by the bank. There is improved efficiency in the remittance space as Diaspora Remittances through international money transfer operators, IMTOs, rose to $402.38 million from $336.61 million in 2024. From January to October 2024, remittance inflows totaled $4.22 billion, almost doubling the $2.62 billion recorded in the corresponding period in 2023. These figures underscore the impact of our policies and the confidence diaspora Nigerians have in contributing to national development. These inflows are expected to significantly improve the end of year given the trajectory. The spread between the official and BDC rates has narrowed significantly from 317.91 in January 2024 to 52 naira in November 2024, reflecting fundamental price discovery, enhanced market efficiency, and reduced arbitrage opportunities due to the introduction of the beam match system. The current account surplus has strengthened consistently in the past 3 quarters, recording a surplus of $6.06 billion in third quarter 2024. This positive trend is largely attributable to a favorable trade balance driven by increased remittance inflows and decline in imports. External reserves rose to $42.01 billion as of December 12, 2024, compared with $38.35 billion on September 2024, driven largely by receipts from crude oil-related taxes and third-party receipts. This, of course, is the largest reserve figure that we have had in over 3 years. In third quarter 2024, we maintained a current account surplus and saw remarkable improvements in our trade balance. Our external reserves level can finance over 9.09 months of import of goods and services, or 13.91 months of goods only, higher than the international benchmark of 3 months and a robust buffer against shocks. To June 2024, signaling growing investor confidence. While we are encouraged by these positive trends, the CBN remains vigilant and committed to implementing policies that support sustainable growth in our financial markets while maintaining overall economic stability. Mr. Chairman, esteemed members of the Senate, allow me to outline the key policy initiatives and strategic measures recently implemented by the bank to tackle the economic challenges we have discussed. To combat inflation, we have implemented a comprehensive set of monetary policy measures. These include raising the policy rate by 850 basis points to 27.25%, increasing cash reserve ratios, and normalizing open market operations as our primary liquidity management tools. These integrated measures aim to stabilize prices, optimize liquidity management, and bolster the robustness of our monetary policy framework. We remain committed to not going back to interventions that took place in the past. We shall continue to rely on conventional tools in our monetary policy management. Let me at this stage, Mr. Chairman, say something in context to the presentation you have made on interventions and interest rates. Now, I think it is important for us to recognize that we have a major backlog.
We don't know what CBN does. He has to start by telling us what the job of CBN.
Many of which, quite frankly, are still out there and perhaps can be argued that they did not accomplish the objectives they were set out to accomplish. As a result of which, this has significantly distorted the macroeconomic fundamentals. A lot of money is in circulation. We can go back there's a statistic that is probably very well known these days, and that is in the course of the past 8 years, we had a situation where our economy grew by, on average, 1.8%, while money supply grew by 13%. When you have such a huge differential between the two, I think the outcome should be quite evident to everybody. And those are some of the things that we are grappling with right now, with the result that we have no option but to maintain a tight monetary stance, especially considering that a lot of this money over the recent past had gone into foreign exchange type transactions, and in short, had chased foreign exchange. Now, for us, we are looking and we continue to be in the mode where, one, interventions that had started and hadn't finished, we have no choice but to see them to their logical conclusion, and that is a lot of money, which will unfortunately be injected into the system over a period of time. And we are also looking to partner with developmental institutions whose business is that of intervention and development. And that, we believe, will at least ensure that the interventions get to where they are meant to be. I hasten to add that Nigeria at this stage cannot afford any failed interventions. On the foreign exchange market, the Naira has begun to exhibit stability following considerable fluctuations in early 2024. The bank has introduced the Nigeria FX Codebook to enhance price discovery, ethical conduct, market discipline, and transparency in the market. The bank recently introduced the Electronic Foreign Exchange Matching System, EFEMS, for FX transactions in the NEFEN. This aimed at enhancing governance, transparency, and market-driven exchange rate, eliminate speculative tendencies, reduce market distortions, and improve the bank's oversight capabilities. On banking supervision, the bank has taken decisive actions to ensure the resilience of the banking industry, which includes increasing minimum capital requirements of banks to support the $1 trillion economy, and revised cybersecurity rules for banks and payment service providers. Following the recapitalization announcement, banks have submitted their recapitalization plans to CBN, which have proposed several strategies, including public offers, rights issues, private placements, capital injections, and mergers. So far, 15 banks have gone to the market to raise capital via public offer, private placement, or parents injection. Capital verification is ongoing for the amounts that have been raised so far. The points that have been raised by the chairman with respect to speeding up the process of capital verification is well noted, and I assure you that as a result of various feedback we've had, we have already been on the way of ensuring that that happens. Suffice to say that it is critical that the central bank ensures that fit and proper people and fit and proper interests find their way into the banking industry, and therefore have taken the extra steps to verify inflows into this particular offering. CBN has engaged with external stakeholders, including SEC, FIRS, and CAC, to seek their cooperation and concessions on charges and procedural protocols to speed up approval for the bank's recapitalization process. On cash shortage, the bank has declared that it will impose a fine of 150 million naira per branch on deposit money banks found guilty of enabling the illegal distribution of mint naira notes to currency hawkers and unscrupulous agents. The bank has also announced a new daily transaction limit for point-of-sale agents in order to eliminate currency hoarding by operators and their cohorts. This is expected to improve cash availability for customers at official outlets, ATMs, and over the counter. Mr. Chairman, I want to assure you we are very, very mindful of the issues, particularly at this time of the year, and we have put everything in motion to ensure that we tackle this particular issue with the seriousness it deserves. Today, yesterday, day before, we've had extensive discussions and meetings with various stakeholders, and I believe we are all on the same path to ensure that immediate solutions are found and that short, medium, and long-term solutions will also kick in. As part of the effort towards deepening financial inclusion, we recently launched the Women Financial Inclusion Data Dashboard, where all regulated entities now have a centralized platform to report products and services tailored to the women's market segment to ensure accountability and progress in bridging the financial inclusion gap. There has been significant improvement in policy coordination between the fiscal and monetary authorities since the onboarding of the new management of the bank. And again, Mr. Chairman, to your point, you made reference to this in your speech, of the importance of the collaboration between the fiscal and monetary authorities. And I want to assure you that that is ongoing and is in fact improving. Several key joint committees have been set up to enhance policy coordination and engagement on a more sustainable basis. Distinguished senators, I am delighted to inform you that the bank's policy initiatives are yielding significant results across multiple sectors of our economy. In the foreign exchange market, we have achieved increased transparency and improved overall supply. These two things go hand in hand. Increased transparency results in improved overall supply, and we are seeing that happen. The convergence in the exchange rate was sustained in third quarter 2024 with a premium between NAFEM and Bureau de Change rates stabilizing. This convergence has eliminated arbitrage opportunities and speculative activities, restoring market confidence and enhancing foreign exchange stability. I believe that the numbers speak for themselves. Investor confidence has improved, evidenced by a significant increase in foreign investments. Capital importation surged to $6.49 billion, cooperation from all stakeholders, government agencies, the private sector, and citizens. Only through collective efforts can we overcome challenges and steer our economy towards robust and inclusive growth. With your support and the central bank's steadfast dedication, I am confident that we can pave the way for a more prosperous Nigeria. Thank you for your time and attention.